to our guest of the day. This is going to be Steve Rhodes. Steve is the author of the Mastering Probability newsletter. Now is as good a time as any to catch Mastering Probability. I really enjoy how thorough it is. And honestly, Steve, I think you can hear me right now, show today was fantastic. So I'm really looking forward to hearing what you're bringing to us today. And again, folks, if you want to check out Steve's show, that's on at 11 a.m. Eastern time on our YouTube channel, Tiger Financial News Network. Steve, how you doing?
I'm doing great, but the question I really need answered: University of Florida or Houston? Who's going to win tonight's game?
I'm so biased, but I have to go UF. That's the problem.
Me too. Actually, me too. Hopefully, it's a good game, and in the end, University of Florida wins. So it was a great Final Four.
Oh yeah.
I thought the entire series. So was happy to see that. What I thought we could do today, Jacob, is first talk about the weekly time frame charts. And that's the first chart that I've got on my screen. And here I've got the primary indices that we pay attention to, some which can be traded, some which can't. If we take a look at this core group of 8 weekly indices, if you immediately go to the bottom left-hand corner, you're going to see the semiconductor index. And the semiconductor index, so as you know, one of the patterns that I use to help identify tops and bottoms for any time frame, any instrument, is the TD9 count pattern. It was developed by Tom DeMark. That's what the T and the D stand for. And the way that it works, if you kind of visualize it, you've got to get to a count of a total count of 9. And what it's really looking at, it's looking at momentum. And it's like running a race. You and I have talked about it. You know, you would think that somebody, the fastest runner in the world, could run the 100-yard dash and, be able to not be able to be totally have spent all that energy, but that's not the case out there, and so the market does that same kind of move. And so if you look at the very bottom left-hand corner, you'll see that last week was a TD9 count bottom pattern from a weekly standpoint. And that makes the number of 35, 29, 60 really important, not necessarily during the week, although as long as price remains above that, that would be a bullish signal. But Friday, you need to close above that level. If on Friday price closes below that, then we've got further to go to the downside. The markets the indices have never had a significant bottom without the semiconductors having a bottom as well. They don't have to happen on the same day. Sometimes they can be a couple of days apart or what have you. Now, when we take a look at the other indices out there, you'll see that they are going to form bar number 8 or likely to form bar number 8 this week. In a TD9 count pattern, in this case here, we're taking a look at the bottom. The low must form on either bar 8, 9, or the bar following bar number 9 out there. In the case of the semis, it was the bar following bar number 9. So this tells us that it's possible, with us being in week number 8, with the Dow, with the S&P, with the NASDAQ, with the Russell, with the New York stock, with the NASDAQ composite and the transports out there, that we could be seeing a bottom that's actually forming this week. So between this week and the next two. Well, how will we know, whether we're forming a bottom now or not? First, this is really an interesting chart out here, and this is the spot VIX. And I don't really take a look at the spot VIX on a weekly basis that often, but I did pull it up for our review here. Yeah. And what's interesting here, referring to TD9 counts, you'll see that that we are in a bar number 8 this week on the spot VIX index. I had to go, the last time that there was a weekly TD9 count top was the March 2020 low. And you can see that it was bar number 9 that identified, that's on the left-hand side, that identified the top out there. Bar number 8 held, in other words, price never closed above the top of bar number 8. So this is lining up with what we're taking a look at in the weekly charts for the indices out there. And they're suggesting that we should see a bottom. That's between today and really the next 2 weeks out. So how do we try to narrow that down a little bit? Well, the way that I do that is if the weekly is going to form a bottom, we're going to see that first really on a shorter term time frame chart. And what I would start with would be the daily time frame. Here, when we take a look at the same cash indices, what we'll see is primarily A to B equals CD patterns. And we have the same A to B equals CD patterns on the weekly time frame chart. So how do we know when those complete? A to B equals CD patterns complete when bullish reversal candles form out there. That's how we know that the cavalry is at least here. They're going to try to hold their position. And so what we're waiting for these cash indices is a bullish reversal candle.
Yeah.
Now, The semiconductor index, that's the lower left again on a daily basis, is going to go ahead and form bar number 9 of a TD9 count today. So for its weekly time frame, we have a TD9 count. For its daily time frame, we have a TD9 count. Now, that daily pattern will go ahead and complete tomorrow. It also turns out that we have some other bottoms that have confirmed today. And those bottoms require I typically refer to a bullish reversal candle, a bullish engulfing candle, a bull sash candle, a hammer candle. I really narrow it down to just 7 that provide us with the turn information, the reversal information. But there's also something referred to as a key reversal bar, and that's what's transpired on the daily time frame for the NDX 100. Now, in order to have a bullish or bearish candle key reversal, in this case here, we're going to talk about a bullish key reversal bar, you need 3 distinct things. The very first thing is the market must be in an extended condition. Well, we've got this A to B equals CD pattern to the downside. That qualifies as an extended condition. Number 2, price must trade above the prior day's high and below the prior day's low. Well, that was accomplished today. Okay. And then the third thing that needs to happen is the NDX 100 today needs to close 1 tick above where it actually opened. Now, we could easily get a sell-off between. Maybe we already have a sell-off because I'm just looking at my charts here. But as long as we don't get that sell-off, we close 1 tick higher, then the NDX 100 is giving us a buy signal, a buy the D point pattern, and that's using that key reversal bar. Okay. I think that the Russell 2000 also has a key reversal bar, so that's confirming a bottom. The NASDAQ Composite has a key reversal bar. The Dow Transports have a key reversal bar. So where it's not typical with what people will look at when they're watching me in the show and as I'm reviewing charts out there, where we'd see something as distinct as a bullish hammer candle, here we've got key reversals. So we've got bottom signals on the daily time frame. So the markets are definitely trying to bottom. Any questions about the key reversal bar or anything so far?
Yeah, sorry, what level does it need to close at to kind of solidify that?
So on the cash indices,
yes.
So specifically, and I don't have the charts open, but okay. If you take a look at wherever today's open was, looks like around 16.6 something or what have you, as long as price closes one tick, just 1 tick to the upside.
Okay.
Because price has got to close the day in the opposite direction of that trend. So as long as there's one little green, as long as today's bar is green for the NDX 100, for the Russell 2000, for the Dow Transport,
sure.
They will confirm bottom patterns. They will confirm buy the D point bottom patterns today, and the semis are confirming a daily TD9 count pattern. So that's something to look for. Now, all that sounds pretty good. What doesn't sound good? Well, what doesn't sound good right now to me is the fact that the 3 of the 4 daily equity future contracts do not have bottom patterns at all. And typically we would see this too. The Russell 2000 does. So the Russell 2000 equity future contract ticked above Friday's high,
Steve,
traded below Friday's low. I see we're going to break. Yeah,
can you hang in there?
Perfect. You bet.
Folks, stay right there. We'll be right back with Steve Rhodes right after the break. Welcome back, everybody. We're joined right now by Steve Rhodes of Mastering Probability. Go check out his newsletter. You can do so by going to TFNN.com and clicking that newsletters tab. Steve, before we went to the break, we were taking a look at the Russell, huh?
Yeah, we're taking a look at this. So the Russell 2000 equity future contract of the 4 is the only one that has that key reversal bar, and so that's confirming a bottom. The ES, the YM, and the NQ are not, and so they are forming bar number 7 today of a TD9 count. So one possibility is that we see a flush to the downside. No idea when that time period might come, but I would suspect it could occur overnight as China and Europe come back on board out there. So that's one possibility. If we can tick below today's low, that will trigger bar number 8 of a TD9 count, and that would then suggest that a TD9 count bottom pattern could form tomorrow. Go ahead and complete on Wednesday, and that would then set up the bottom. And you like to have really synergy between the cash indices and the equity future contracts. We don't have that as we speak. Another reason to be looking for a bottom versus a continued move to the downside, in last Thursday and Friday's crash, comes from the spot VIX. And what we're looking at here, so the VIX futures contract is in what's referred to as contango. What's contango? First, if you take a look at the April future contract out here on my screen, you'll see that it was trading at 32.25. Not sure where we're at right now. That was the April contract, well above, even going all the way out to December, what those future contracts are. So when the current contract is traded above all forward futures, we get into contango. That is not a normal position out there. In fact, this is telling us that the issues that we're dealing with in the stock market are short-term oriented. In other words, likely maybe tariff, maybe it's something else. It doesn't really matter. It's short-term. You know, what I can't do on any kind of a chart is I can't go click on the day and try to understand what was going on. There's no news events or anything like that. So it makes pattern trading. Just pay attention to the patterns that are out there. Well, one of those patterns is when the Spot VIX has got some really cool utilities. And one of those is when it goes into contango. What you can also see up here is I've got the ES Mini. Then I've got the Spot VIX. Then I have what's cool about the VIX, they finally created a product a couple of years ago where they'll take a look at what that 3-month Spot VIX index looks like, the 6-month and the 1 year. Now, what I do with those is I create a ratio. That's the difference between the Spot VIX and the and then the 3-month, the 6-month, and the 12-month out there. And those are reflected in the bottom portion of these charts. So when price is above the 1-0, that tells us that we're in contango for these time frames. Now, what I've identified on these charts here with these green arrows is when we get in contango, they always form a buyable bottom. Now, maybe it only lasts for a few days, a few weeks, maybe a few months out there. Sometimes they last forever. So you want to be paying attention. Now, when the confirmation from a daily standpoint, or from a confirmation from any standpoint that the bottom would be in, is when that is when the contango pattern goes away. So when the ratio would dip back below 1. So that would be, so we're in this contango pattern that says anticipate or look for some type of bottom. If we look at the New York Stock Exchange, it's advanced decline oscillator. The advanced decline oscillator is nothing more than looking at the advanced decline line. That's panel number 2 on my chart. And it compares the difference between the 39 exponential moving average and the 19 period exponential moving average. When that formula gets us below -150, we are officially in oversold condition.
Right.
So we're oversold condition. We've got contango. We've got TD9 count bottom patterns out there. We've got everything in order for a bottom to form this week. If I take a look at, you had asked me earlier about how, and we've talked about this when we do the Monday segments, how the market is trading in other currencies.
Yes.
So if I switch over now just to take a look at that, this chart is looking at the Dow traded in US dollars, euros, yen, Australian dollars, the Swedish krona, the Great British pound, Swiss franc, Chinese yuan, and the Canadian loonie out there. And in bull markets, or on days when we are rallying, what you want to see is whatever instrument priced in these currency pairs also rallying at the same time. Those form the biggest bear markets. They also form the biggest bear markets, right? If everything is moving to the downside in all those major currencies out there, that's telling you be careful. Now we can see that the Dow earlier, when I took a snapshot of this, in these other currencies, it's at least trying to get about Friday's lows out there. And we take a look at how something is trading in major currencies. This is a chart that shows how gold is trading in Middle Eastern currencies. And if you take a look at, I left my cursor on the day of the high. And so you see just that little dashed white line, a vertical line that you see out here. Well, here we can see that gold priced in Middle Eastern currencies has topped on the exact same day. Folks, if there's not a be careful signal, I haven't seen one that's larger than this. So it just is suggesting that gold price, that's something positive, at least something positive in the Middle East for some period of time. Maybe there's a glimmer of hope there with gold topping in every Middle Eastern currency at the same time. We take a look at how gold is trading in most of the major currencies. We've got gold trading lower, the only exception being the Aussie dollar out there.
Yeah.
So gold even priced in those currencies. So it's nice that you asked about it because I could kind of flow into this so that people could understand from a gold standpoint, now is time to be careful. If we look at the gold contract, it's trading below its daily profile. The daily profile formed last week. That's at 30.4960. As long as price remains below that on a daily price, pressure is to the downside. On a weekly time frame, last week completed a Rhodes Momentum Indicator top. We're now trading below, or we were trading below the top of that profile, which is 3,120. If we remain below that, that opens up the door for a move to 290280, or maybe even 2738, or even 2657. But if I look at the monthly time frame chart, the monthly time frame chart will complete a TD9 count top this month. Again, all this says just be careful. Price should pull back to test support. On a monthly time frame, the support level would be at 28.66 out there. And if price gets below that, it opens up the door for 26.88, 25.54, 24.39 out there. Now, what I think is that we're going to see here is we'll see a flush to the downside in gold to shake out the weak hands out there.
Definitely.
But what I'm watching for is some kind of pattern to suggest that we've got a bottom. And we do not have that whatsoever when it comes to gold, and we're getting those signals with regard to gold priced in all kinds of currencies out there. So that's what I've got for you for the day. Any questions or anything else that?
No, great presentation again. And folks, if you have any questions, of course, you can just message us in the den. But Steve, we're looking forward to hearing from you tomorrow at 11 a.m. Eastern time.
That sounds great. Jacob, always good to talk to you. Have a magical Monday, and go Gators.
Go Gators, Steve. Thank you so much. See you tomorrow.
You bet. Take care.